Welcome to Behind the Ticker, the podcast where we go beyond the symbol and into the strategy. I'm Brad Roth, founder and chief investment officer at Thor Funds, and in each episode, I sit down with ETF managers, CIOs, and industry leaders to break down how these funds are actually built, how they behave in real markets, and how advisors use them in real portfolios. Most people just see a ticker symbol, but we know much more goes on behind the ticker. Hey Mo, welcome to the show.
Thanks, Brad. Pleasure to be here.
So you and I have come full circle. You are the reason the show exists in the first place. I can remember in a cabana in Miami asking you about doing a Netflix series with the New York Stock Exchange, and you said, why don't we start with a podcast? And so here we are.
Here we are. It's amazing how life works. Everything's full circle. And obviously, congratulations to you on the success that you found with Behind the Ticker. And then also just broadly with your business, right? I remember that conversation. I remember other conversations around you launching your first ETF. And clearly, you've continued to evolve a business. So I give you a lot of credit.
Thanks, Mo. Well, this show's about you, not me. So let's talk about, you've had a very interesting career. You started Vanguard in product management. You helped build out some of their global ETFs and mutual funds. And then where we met, you were at NYSE and you ran new business development for exchange traded products. Then you took a stint over at Raymond James and you were, to be hired as running their full-time ETF platform. And now you were chief product officer at Direxion. And so can you kind of just walk me through how that career path went from, low-cost index giant to what you guys are doing over there at Direxion?
Yeah, perfectly linear, right? As careers often aren't. So it's been a fun ride. I feel very fortunate to have had the experiences that I've had to this stage in my life. And as you referenced, all started at Vanguard. I wouldn't change that ever, because that was a place where, I really learned a lot about how to work and how to work with others, as well as, I think a really important kind of premise on investing. And something that I'm still hold true today, despite, where I currently sit. We offer different products. I think the core behind it remains the same, of creating tools and solutions for end traders or investors, and leading with education, which I think is really important. Along the way, had the good fortune of spending some time looking at global markets, as you referenced, and continue to do that here at Direxion, outside of the US, so Europe as well as Asia Pac. And then really formative was the place where we met each other, and so the New York Stock Exchange. And so a really interesting time in the ETF industry when I joined there in late 2019. The ETF rule had just passed here in the US. Those nerdlers call it 6C11. Even the ETF rule is kind of nerdy in itself, but a really important thing for the industry. And I kind of saw the writing on the wall and had an opportunity to come in and help the exchange think through, how do you transition to potentially a next wave of growth? And that was really what my role was. And so helped new issuers like yourself launch the business. And at the same point in time, I think importantly, I got to know the ecosystem at a level that I didn't have an appreciation for while I was at Vanguard. Vanguard, I built really strong internal connections. As I said, learned a lot about the ways in which, you can build an organization, work, and how you build successful products and ensure that those products are healthy within the marketplace. But was in Malvern, Pennsylvania, kind of away from everything. And when I moved to New York City as a kid growing up in Montana, was not on my radar as a place I thought I would ever live. And there I was in the middle of COVID and the lockdown, moving into Long Island City. And the following 5 years roughly at the exchange were extremely formative in terms of really everything coming through you at an exchange. And so built relationships like ours and many other across this industry that I'm very grateful for, and have served me every single day since that point in time. And then brief flyover at Raymond James, phenomenal place to work, and anticipated staying there for a longer period of time to help build out their ETF platform. I watch what's happening there quite often. They've had good early success with the products that they brought to market, which I'm happy to see. But was really, quite excited about this opportunity here at Direxion to become the chief product officer. And so it really came down to an opportunity to kind of control a phase of growth. And this is a really dynamic firm and dynamic part of the market that, I had spent some time with previously, but really hadn't dug into, and I've enjoyed them about just a little over a year in. This week was a year anniversary, and it's been a roller coaster as the markets are, and given the strategies that we primarily kind of employ to traders into the marketplace today, we feel that very acutely. But it's been a lot of fun, and I'm really looking forward to what we have coming over the next months and years, because I think our product lineup is going to continue to grow. We launched 4 more ETFs today, single stock strategies focused on names like United Healthcare, Adobe, Texas Instruments. So names that the traders know and that we all know and appreciate. That's part of our continued evolution as a firm, is to provide those tools for traders. So it's been a lot of fun.
Well, I guess I let my inner Yinzer come out, calling it Direxion rather than Direction. So I'm glad we got
All
that
good.
squared away. Before we get too deep into the firm and the funds, I know it's an exciting day. You guys are launching some new product. What do you do for fun? Any hobbies? I know you got a
Yeah.
couple of kiddos running around, and so it's probably time limited.
It is time limited these days, but you and I can both share the little kids. And so I have 3 boys under the age of 5, roughly. I guess the oldest is now a little bit over 5. Uh, but they consume my free time. And increasingly, we're slowly moving into sports. So tonight's a basketball night. So I'm very excited. There's nothing like seeing a 3 and a 5-year-old play basketball with, a group of about 15 others. And then, the weather is finally, hopefully, taking a turn here in the Northeast. And I know you're a golfer. I'm a golfer. My oldest, the kid is obsessed, and it makes me very happy. And so, just earlier this week, it's pouring rain outside, and my wife sends me a video, and he's got a rain jacket on, and he's just hitting practice golf balls in our backyard uh, at 5 years old. So that is a lot of my time. It's really outdoors, right? That's what keeps me kind of grounded. I spend the days in front of computers and on the phone and doing things like this, which I do enjoy, but I enjoy the human connection more than anything. It's fantastic just to get outside, and that brings me back to where I grew up in Montana. Yeah. Doesn't matter what it is, as long as I'm outside.
Yeah, well, the Northeast, we don't get too many opportunities to be
Yeah.
outside, but we take what we can get it. Before we actually get into Direction, I did want to ask you a question. You had a very unique vantage point at the NYSE, right? You were on the listing side. You saw this like giant wave of product come through during your time there. I'm interested to hear, what do you think separates, ETFs that succeed and the ETFs that just flounder? I mean, you probably saw 1,000 listings, maybe more in your time. Just like briefly touch on that. I think it would be interesting for the listeners to hear.
Yeah. Yeah. So, I mean, very clearly, it's a phenomenal time in the ETF industry. I was at the kind of the second wave, as I said, of that growth. And, I think over 150 new issuers I helped bring to market in the 5 years I was there, and, almost 1,500 ETFs. I think last year the industry launched over 1,000, which is still hard to believe. But I think to the root of your question, hey, business is challenging, right? There's a reason why, there's always the statistics of whatever 99% of businesses fail in the first few years. And so I think what I observed is those that found success did a few things probably overarchingly well. They entered in with a plan, but most importantly, they were dynamic through that entry point. And so I think, it's fantastic to say, I'm going to launch my ETF, and in the first 6 months, I'm going to raise, name your target, $25 million in assets. And I'm going to do so by targeting these RAAs in this areas, or by using these friends and family that I have, or institutions, or whoever you kind of lean into. But what you find is once you actually get your product in market, the product takes its second life, right? And you have to then be responding to what that feedback is every single day. When you're a big organization, you have levels of that, and you set committees to manage, feedback that comes from sales and from marketing and traffic you're seeing on your website, things of that nature. But for most that I was, truly helping, it was, you're a few people. You're an example of this, Brad, that you're doing everything every day, right? Some are a co-PM or a PM themselves. And then obviously, you are the face of the ETF and the business. And so you got to go tell the story. And so, I think those that found success were always taking in what they were hearing and trying new things, right? And importantly, I think leaning into how distribution has changed. And so, yes, distribution is still kind of carried by some of the bulge brackets, and they can bring you an immense level of scale. But underneath that, given what we're doing now and the continued evolution of technology, you as a small issuer have a chance that you never had before to get your message out there and to tell your story and to use tools that admittedly larger organizations struggle to bring into their organization to go target new types of clients and follow up and interact with them in new ways. I think it's lots of words for it's focus on distribution, have a plan, and have a plan that is nimble. Don't be afraid to say, oh, throw that one away. Let's go try something new today. But that's my perspective. I don't know. You live through it. I don't know if there's anything there that resonates with you.
Yeah, no, it's definitely you got to wear a lot of hats and know when to pivot and try a lot of different things because you never know what's going to hit, what's going to land, and it's kind of like playing whack a mole. But we've tried everything, and we're going to continue to try as much as we can. So, but let's talk about direction today. You guys basically pioneered 3x levered ETFs in 2008. You guys are humongous, 39 billion in assets. For people who only know T triple Q and S triple Q, can you kind of talk about the full scope of the lineup right now?
Yeah. And so, one point of clarification, we're actually thankfully larger than 39 billion. Actually accelerated from a growth standpoint to around $55 billion
Wow.
sets. And yeah, we offer today now with the launch of the most recent four today, 130 plus ETFs. And the core of the business has been focused on creating tools for active traders to express their views for short periods of time. And so, our ETFs are different, right? We started the conversation by talking about my career and where I began at Vanguard. Low cost SIP products. Yes, they have a large active franchise, but the core of what they did was buy and hold strategies for individuals looking to meet a long term and intermediate term goal. At Direxion, the focus is more so on, hey, you believe that tomorrow something is going to happen in the market and you have a view you want to express based upon that view. And so obviously we're in the midst of a conflict in the Middle East, lots of news that continues to come in regards to, a ceasefire happening, a ceasefire not happening, right? What our lineup provides is tools for you as a trader to express a view on that theme or that thing that's happening. And what we do is we offer strategies that allow you to magnify your returns. And so you can go up by 2 or 3x the stated return of, say, S&P 500 for a single day. And I think that, importantly, investors and traders have to understand how our products work. And so, I always say we lead with education. We have Direxion.com. There's a great resource on there called the Direxion ETF University, where we talk through how these strategies are built to function and the potential ramifications of holding them for periods longer than a day, because that's what they're built for. They have a daily reset in them to say, hey, I'll give you, S&P is up 3% today. I'll give you 3x that. That's 9%. But if you hold it that second day, there begins to be factors that come into play that could result in you getting greater leverage or less leverage than that 3%, excuse me, three times. And so I think that's a really important concept. But I think, at its core, what we're building the business towards is, in 1997, Rafferty Asset Management and kind of like in theory Direxion was born. We launched our first ETFs in 2008 and 3X. But the catalyst of that was taking something that was largely inaccessible to, most investors or traders because of either cost or complexity or just general access, and making it accessible. right? And so that was what we were after: complex, simple, and accessible. So as we look at, the lineup on a go forward basis, we're very interested in continuing to build off of that. And our lineup is all from broad strategies like an S&P 500, 3X, ETF, SPXL, to what we did today, which we launched, 4 single stocks. And so highly concentrated, a singular name. And what we're seeing is traders are increasingly interested in expressing their views on the name based upon earnings or news or macro events. And so, I mentioned obviously 3 of them. PayPal is the 4th, kind of within the list. And that's a franchise that's growing for us quite quickly. And what we're interested in is just nurturing. And so continuing to put product out there. And admittedly, some are going to fail. We announced we're going to liquidate, 10 ETFs, 8 of which are single stock names. And that's an acknowledgement that, traders are not interested in trading a name like Ford today, right? Retail sentiment may be high in that name and the underlier, but really it doesn't translate to interest in our community. And that's okay, right? That's a learning for us. But to kind of tie a bow on it, as we go forward, it's all about taking complex products and creating accessibility and making them simple. And so in some ways, I feel like the market is kind of moving towards us. And so, you and you've had a lot of conversations. I spent a lot of time with people across the ecosystem. I think we saw increasingly that more complex things were coming into ETFs, right? From cryptocurrencies and digital assets to private assets to true structured products. And so I think that creates a lot of opportunity for a firm like Direxion to leverage the expertise that we have as an organization in both the capability and the technical knowledge, as well as the storytelling, to go do that to new and expanded audiences. And that's what gets me really excited.
So you mentioned you're launching 4 new products today: Adobe, PayPal, Texas Instruments, United Health is in there. How did Direction decide on, hey, this is the name we're going to 2x or 3x, and kind of walk me through that process? Is it almost like the thematic approach that the thematics are taking, where they're saying, okay, this is where the market is moving, this is where traders are trading, this is where volumes are? I mean, do you guys have it down to a science, or I'm sure it's more than just throwing a dart at a dartboard with 500 or 1,000 names on it and saying this is the one we're going to put leverage on?
Yeah. I don't have a dartboard here that I toss things at. It would be a nice addition to the office space. But yeah, so it is a bit of art and science, as most things are. And so, we try to obviously stay on top of what's happening and clearly the primary market in underlying names in single stocks from a sentiment perspective, particularly from retail, right? And so given the relationships that we have because of how our business is built, we get a lot of secondary and market research, and we consume that and we use that as an input into our process. Secondarily, we also look at, trying to, test out different themes, as you said, that we think may resonate with traders based upon either we're seeing broader interest in, a sector or an industry, or maybe we have increasingly a view of something where, the puck might go this direction in the future. And so it's kind of a balance of those two things. The puck is here right now, very clearly. Obviously, the AI trade is in vogue. Semiconductors are an area of focus. We have, a lineup that helps to support that. We've expanded that lineup even today with Texas Instruments as one of the names, right? But maybe one day semiconductors aren't the things that we're all after, right? At one point in time, it was kind of what's behind me here, and people go, "What is that?" It was gold miners, which obviously has very much been in vogue, earlier in the year and the last year, and so you kind of have to balance it. And energy obviously is very much in focus, and so we have a lineup that kind of creates resiliency. As I increasingly think about it, you know, for single stocks, we're looking for attractive names that resonate, that are newsworthy, but we're also looking to see how do those names combine with existing either sector or industry or broad-based strategies that we offer for traders, such that you have multiple points of entry. And so, one of the items that we introduced last year from a product standpoint is this concept of concentrated baskets, and we called the series the Titan series. And really, it was built on, tactical traders can go get broad market exposure, they can go get sector exposure or industry exposure. And so, technology, semiconductors, or they can go get the single names, NVIDIA or Texas Instruments. But an in between would be, well, how do I just want to concentrate on the names that are the ones that are really leading that sector industry? And so a top five by market capitalization within a sector or industry. So semiconductors is a perfect example, right? Where you have five names every quarter, it's rotating out and it's equal weights, and they're getting 2x exposure. So an interesting test to see appetite from traders for new ways in which they can kind of deploy their capital and make decisions. Yeah.
So I noticed these, these these four new ETFs you've launched today are bull only. There's no inverse to them. I'm sure that was deliberate. Is there going to be an inverse released at some point, or is the demand for these particular products more one sided?
Yeah, it's a really good question. It's a thoughtful one. Yeah, so as we've approached product development, we historically would go bull and bear and pair that to provide trainers with an ability to express a view on the side. What we've seen is in some ways not surprisingly, most traders or investors tend to be optimistic. And so if we look even back to the founding of the company, and we've longstanding had both bull and bear strategies, assets have overwhelmingly been placed in bull products. And so, we use that information to then make a decision to say, where do we think we should place an individual name? And is there interest and enough appetite to potentially go in either direction? And so, with these names, we felt as though initially, the bull case was stronger. You look at a name like Adobe, right? Very clearly, we're in the midst of, maybe the SaaS apocalypse, and everyone's rotating out of software. Maybe I obviously don't know. If I had a crystal ball, I'd would maybe be doing a few other things on the side as well. But Adobe has been beaten down, right? That there's opportunity there. Conversely, early last year we launched two strategies off of Oracle, and we provided both sides of the exposure, and we thought, hey, Oracle is now a name that's very topical for traders as well as for retail investors. And there's enough news and sentiment in either direction to move that stock, particularly obviously with, Ellison being at the helm of that firm from a chairman perspective, that it makes sense. The other thing I would say is, we continue to assess, appetite for different leverage points. And so many of our single stock strategies are at -1 today. And, I think that that's a hedging tool. And I think that there is a very discrete use case for that. And we do see that, advisor community is increasingly expressing some interest in using those as a tax efficient way to, not have to sell out of a name if they believe they're maybe overexposed going into an earnings cycle or something of that nature. But we're seeing higher leverage points, and maybe there's greater retail interest in those sorts of things. And so it becomes a bit of an assessment of where the market is and maybe where it's going.
So a lot of advisors listen to this show, and a compliance department hears a 2x lever ETF product, they have a heart attack. But I do know a lot of advisors that do use these products, and so they are used, beyond just retail. How would you, if you're sitting down with an advisor, best use case for these products? I know that there's many different variations. You kind of brought one there as a hedging mechanism, but advisors really do. I mean, with a lot of advisors that really don't understand that, like, it's a daily and there is a decay and all these other things. So you can just kind of touch on, an educational piece for advisors on how they should be viewing these products, and if they do want to use them in their business, what would be the best use case or some of the best use cases?
Yeah, of course. So I think, right away, I'd say, I played it earlier, go to Direxion.com, look at our ETF university, take the courses. They're pretty straightforward in terms of the time commitment to do so. And then if you have questions, reach out to us. You can reach us directly via the website, and we're happy to take any follow up questions you have. We want to ensure that users of our products are understanding how they work. I think that is a critical component piece. Now, to the core of your question, I think about the use cases I described one on the bear product from a hedging perspective. I think on the bull side, it is truly to express short to, sometimes intermediate term views. And I mean, intermediate terms is, weeks views on a particular sector, industry, or increasingly single stock name. Uh, and so single stocks, let's just use as a practical example. Earnings season is where we tend to see the greatest volume in the lineup. Not at all surprising, right? So as you're going into earnings, you as a advisor may have a client who, is either already very long the name, and you can use, one of our inverse strategies, excuse me, to hedge it, as we discussed, or they could have expressed interest to you in wanting to be long that name. And here's a way in which you can express that view for them, right? And so if you go into the earnings cycle and you're very bullish on, they've been reading what's happening, say at Texas Instruments, and I think they're going to have a blowout quarter because of the continued evolution of AI and the reliance on chip makers and the shovel and the picks. Well, here you go. Here's a solution for you for that period of time. Other things that are more involved and advanced are on the basket-based products that are higher leverage points, is really views associated with balancing out of your portfolio. And so, if you have your core portfolio, and most advisors tend to take an approach that's a core and a satellite, these strategies are satellite oriented, right? And so they're a tactical overlay. So the same sort of thing going into, say, a Federal Reserve announcement, you have a view in which there's going to be a rate hike or a cut. Use one of our treasury products to express that in either direction, or obviously something broad like S&P 5. And what we tend to see is off those market announcements, there tends to be moves in the market. So I think that articulates a few different use cases, both for single stocks as well as for the broader strategies.
So, what does the next generation of these type of products look like, right? We went through, you've gone through the whole product life cycle now to single stock, right? You've hit all the other big things, like, broad indexes. So, what does it look like? Is it moving down the chain? Is it just continue evolving in the single stock, or is there something else totally entirely that you guys are seeing down the road? I don't know. I'm going to make this up, like leverage tokenization, right? Is that what are you guys seeing, feeling, hearing? What do you think the next iteration is?
Yeah, so I think within what I would call the LNI space, there is a level of maturity that the category is reaching. I kind of reference, we launched some of these concentrated baskets last year, which there's a few of those in market, but nothing quite as targeted as what we did. And I think that's something that we continue to observe, excuse me, is what that uptick will look like. I think right now traders are looking, quite honestly, for more volatility than those provide. And we're seeing that play out. I don't know if that always will be the case. And so that's where we're trying to, balance that. I think that there are opportunities for additional names within single stocks. I think, within the US market, from our point of view, aside from some of the large IPOs that, likely would come to market, and maybe, some additional names that kind of fit within the S&P 500, you're getting to a place where you kind of reached the core capacity. And I think for us, we're pretty risk controlled in terms of how we approach the product development there. We want to ensure that there's ample liquidity and capacity in the names that we bring to market. We're not interested in going down to small cap or micro cap strategies and bringing those out, right? So I think that given that there's a place of maturity within L&I, I kind of view it as defend, observe, think about solutions. That's a bit of the thinking around, having these concentrated baskets, and potentially you pair that with some single stock exposure as a, way in which you're kind of hedging out component pieces, but you're generally long basket, right? So I think that's one thing. It's really then what's beyond leverage inverse. And that's where, my team is spending a lot of time, is thinking about how we fit within that derivatives marketplace, and, how we tell a story that would be adopted by not only our existing base of traders and investors, but also by the next generation of Direxion clients. And, I think we're pretty close to some things there. We have some things that are publicly filed. We'll have a number of things that'll come here in short order that I'm, as I said, pretty excited about. And then I think, longer term, yes, we're paying attention to tokenization. very much paying attention to what's happening in digital assets, in particular, just the blockchain and how the infrastructure surrounding our ecosystem will evolve because it will evolve. It's just a question of when it happens and to what degree. And so there's been a lot of recent news, obviously, off of tokens. My prior employer, announcing a partnership with Securitize, NASDAQ gaining approval for token strategies. I think there may be something there, but it's really early. And there's a question of who are the true users of those products and what is that solving? And I think that, there are some kind of scenarios where, increased access for those that are just digitally native that have historically, invested via a wallet and have, been investing more so in cryptocurrencies. And this becomes an easy kind of off ramp in terms of diversifying their portfolio to other things, right, via tokens. But I think that there's also questions of, what's the cost to get there? And, when you jump behind that.
Well, Mo, this has been a lot of fun. You've been a good friend to me, and I appreciate that. Before I let you go, though, where can people learn more about Direxion and all these new launches and ETFs that are going to be coming to market?
Yeah, no, I appreciate it. And as I said at the beginning, and I admire the continued success that you found and just the fortitude in doing this. I mean, the number of episodes you're on, from the cabana to here. I don't know what the number count is, but
It's 100
uh,
and 105, I think, at this point.
Oh, yeah. See, I respect that. That takes a lot of energy and effort. And I think consistency is a really important thing. But yeah, obviously, direction.com is a great place to learn more about our lineup and our strategies. We're also active across, social media, particularly. You can find us on X, as well as Instagram. Not quite TikToking myself, but every once in a while there's maybe something that pops in those places, and then Reddit as well. So go find us. If there's any questions that anybody ever has, don't hesitate. You can reach out to me as well.
All right, Mo. Thanks for being here.
Yep. Thanks, Brad.